Hello everybody, welcome to the February 18th Tuesday price action review. So getting started here, we're looking at the S&P on the 4-hour time frame, and we have the Nasdaq. So stated last night a little bit later into the live stream, I said that we could likely see the S&P come run below this low while the Nasdaq trades inside of this wick right here, and that could give a rejection for higher prices. And while I still believe that that will be the case and we can see higher prices in the following days, in this lecture I'm going to answer a lot of questions on how to actually trade in tune with the narrative, because as you guys know, this did not form in the morning session. It formed right pretty much at the end of the day and then created the expansion, and the morning session created a run lower. And some of you did not take that trade even though you saw it, just because it was against our narrative. But if we zoom in on this portion of price action right here, going from the 4-hour chart to the 15-minute chart, we can see we have our true day open right here, outlined and drawn across. And as you can see, in the morning session, we created a bearish daily cycle sequential SMT that led us lower to our targets. So whenever you're coming into a trading day, even if the narrative is bullish and price forms a clear-cut sequential SMT from 8:30 to 10 a.m. that opposes the higher time frame narrative, it is still viable to take a trade off of it, but don't expect it to last forever. So as you can see, this still offered a very nice run in price, but as you guys saw later in the day, price completely just reversed. And a rule of thumb is that 6 a.m. opening price. So wherever 6 a.m. opens, if 6 a.m. opens above that true day open, and then price forms a bearish sequential SMT first on the daily cycle, opposing a bullish higher time frame narrative, this trade idea is still valid, but it would serve as a retracement for our higher time frame narrative. And it was retracing to that low that we had outlined last night. Now, if price would have at 6 a.m. opened below that true day open and then formed a bullish sequential SMT after our target had been hit, then we could have expected bullishness today. And since we were already trading at that high end of the range, above the true open, and then we formed an SMT that opposed our higher time frame narrative, that caused this retracement. But if we zoom in a little bit further into this portion of price action right here, going from the 15-minute, still on the 15-minute, we can see there was a TPD right here. And you're probably wondering, well, why didn't you pick this TPD right here? Because in a sense, this is a double TPD, and as you guys know, that's a low probability price action. I will get into why you would have chosen this candle right here as the TPD instead of the one to the left. So we have our daily cycle sequential SMT form, and then we have the TPD form right here. And in order to know how to pick the correct TPD, you would use reversion levels. So going from the 15-minute down to the 5-minute time frame, if we look right here, this was that 15-minute candle range, just viewing it from a 5-minute chart. And as you can see, that final 5-minute candle within that 15-minute candle formed that change in the state of delivery. And then that 9:15 candle opened up. So this 15-minute candle right here, composed of 3 5-minute candles, is that 9 a.m. 15-minute candle. This is the 9:15 candle. The reason why you wouldn't have chosen this series of candles right here is, what did I teach you about reversion levels? You want to see a change in the state of delivery towards the end of the candle's lifespan, viewing it from the lens of a lower time frame. And as you can see, that's exactly what formed. So that's why you wouldn't have chosen this portion of price action right here, because there was no clear-cut change in the state of delivery. But as you guys can see, this 9:15 candle opened up, traded right back into that reversion level, and then made an expansion lower. And on top of that, to solidify it, there was another sequential SMT on top of that on the 90-minute cycles. So it was a 2-stage SMT, but the main focal point of where price actually took off at was that reversion level. And this was one of those trades where if you didn't get in at the very height of it, it kind of just ran without you. So if you missed this trade, do not feel bad about that, because generally higher probability trades will give you 2 to 3 opportunities to get into the move. This was just one of those times to where the move, if you missed it, you missed it, and it is what it is. So hopefully you guys found this one insightful. And yes, in tomorrow's live stream, I will get a little bit deeper on why I chose those specific key levels in price. If price continues expanding off of them and makes a real reversal off of them, and we continue expanding higher in the week. But again, hopefully you guys found this one insightful. I'll speak with you all tomorrow.